How to build 100 crores of portfolio? Well, if you are a second generation or a third generation and taking over the portfolio from your father and wants to build your passive income, then this video is for you. Well, if you are taking over 100 crores of portfolio from your father, then first of all that you need to understand is that how to construct 100 crores of portfolio. What your father would have taken about 30 years to invest in a particular business and scale the business to the next level, you can perhaps think about diversifying the portfolio. Well, I come across with many second and third generation entrepreneurs who wants to build their financial portfolio which may be equivalent to the size of their business, and this is called real diversification. While there are investors who says that they are not happy with their son, but I would say that if son wants to build a bigger portfolio than father, then why not? That's a question and we can continue to debate. But I'll come to the point. If you are thinking about building 100 crores of portfolio, the first and foremost thing is for you to understand what is called alternates. What are the ways of investing in alternates? Let me break this down for you. One of the ways of looking at alternates in India is that there are some boutique investment portfolio managers in India. And broadly, there are three categories of investment vehicles, which is AIF, where the minimum threshold is 1 crore, PMS, where minimum is 50 lakhs, and then mutual funds. Now, particularly in AIF, what we're witnessing is that there has been a lot of appetite for anchor investing in some companies where ideation is done, the business is in a scalable mode, and that is where a lot of investors are showing interest to come in before IPO and scale the business. So that is where we see a lot of second generation, third generation entrepreneur taking a lot of interest. If you wish to extract these deals, you can reach out to our team of people by booking a call at altportfunds.com, and I'm sure they would be able to give you some deals. On the other side, there is something called global investing. Now, everybody is concerned about what is going to happen across the globe, but there are some pockets which are doing well, and there are some pockets which are not doing well. For example, when you look at European market, Switzerland is one market which continues to do well. If you look at some of the emerging markets, India has been underperforming, but you can obviously have good amount of it. But you can also have some amount of allocation towards large companies of US, because these large companies of US markets are not US alone, but basically it represent across the entire globe. For instance, 25% of the revenue of Apple comes from India. So basically you can think about diversifying your portfolio outside of India, and you can get in touch with our team. We can sit down and construct your portfolio in a manner where it continues to create good amount of wealth. And if your portfolio of 100 crores say grows at 26% year on year, then 100 becomes 1000 crores at the end of 10th year, and it becomes 10,000 crores at the end of 20th year. It becomes 1 lakh crores at the end of 30th year. Well, I'm not joking. You can do the calculation of power of compounding. And let me also share that there are some funds in our industry which exist, which has history and track record of delivering more than 26%. And these are SEBI approved number that I am referring to with a lot of authenticity here. So please speak to us in case you need to know more about it, and we will certainly help you to build this portfolio. Thank you.